So while we're waiting for folks to join, I'll give a quick introduction on myself and Chargeblast, and then Mike, I'll pass it to you to give an introduction as well. So my name is Chi. I'm one of the founders and CEO of Chargeblast. Chargeblast is the second largest provider globally of alerts now. We do almost 500,000 alerts per month in a fully automated manner. We have been supporting Shopify merchants since our inception, and we handle over 1,000 Shopify merchants to date. So we certainly have seen the gamut of how folks run their Shopify accounts, manage their risk, and have a lot of learnings that we've applied to our own systems to best optimize for reducing Shopify processing risk. I'll pass it on to you, Mike, to give an introduction yourself.
Cool. Thanks, Chi. So yeah, my name is Mike Ramsey. I'm one of the co-founders of a company called Compaytence. And so we operate really in the high risk payment space, working with international online sellers on their overall payments risk operation strategy. So we have a team, the other co-founders based in Europe, and then I'm based in the US, actually working in New York today and going to be meeting up with you later for some lunch. So looking forward to that. And as far as what we do, we have a couple different kind of core products or offerings. We do risk and reserve recovery. So if you have an account block with Shopify or Stripe or PayPal, really any provider, we'll come in and like de-risk the account, look at everything from like an overall operations and risk perspective. So we do implement things like chargeback alerts, look at like different things from like a website policy audit, and we kind of just cleanse the business and then help you get either your account unblocked or reserves released, whatever it may be. And so we also do payment processing and mid-sourcing as well. So, a lot of times Shopify, it's great to kind of start and scale, but as you start to get into more aggressive offers, or if you're looking to kind of expand into different markets, there are some processors that are more built for purpose. So that's where we would help set you up with that. So that's a brief intro on my team and what we do.
All right. So today we're going to talk about understanding Shopify at its essence. One of the key things to understand is their pivot to becoming a marketplace. This actually has changed the way they go about assessing risk. So I think that'll be a great topic to discuss. Then we will dive into the actual risk assessments on Shopify, what they look for. It's actually going to be quite surprising what you hear. So I'm glad I have you guys all on this call. Next, we'll be talking about maintaining Shopify compliance, then subscription token migrations, and then finally reducing payments risk as a whole, especially for those merchants that have scaled up very quickly and rely on just one single processor. So to give some background, the really interesting thing that I took away from my chat with Shopify risk, and I think the core theme is that Shopify is now pivoting from being a simple payment processor to actually being a marketplace through their shop.app. And Shop is meant to actually compete with all these larger marketplaces such as Amazon, Etsy, as well as eBay. And the reason why this is important to know is because buyer satisfaction now matters more than ever to Shopify. Because if a customer purchases from shop.app and has a bad experience, they're never going to trust shop.app again. And because of this, they've actually changed their overall risk assessments. And they place a lot of emphasis on merchants that actually provide a very high satisfaction rating with their customers versus just providing simple payment processing where Shopify's name is not necessarily attached to the merchant. So here's actually a stack rank of what Shopify cares about most when it comes to risk assessment. So you might have always thought originally that chargeback rates were kind of the one thing that they looked at. But what was interesting is that Shopify Risk told me that they were willing to actually maintain that's and they have elevated chargeback rates when adding back in RDR, but they're still operating on Shopify without any issues because their overall shop.app rating is quite high. So starting on the left-hand side, customer reviews is number one. And where Shopify looks for customer reviews, first and foremost, is actually on shop.app. And understanding what your shop.app review is really critical. So they do look at stuff that's over 4.0 and above. If you have less than a 4.0 rating, you're at serious risk of being kicked off just because they don't want low rating merchants on their shop.app platform as a whole. They will also look at your Trustpilot reviews as well as your Amazon reviews and other areas where you may be selling to make this overall customer satisfaction uh, global rating that they do their risk assessments on. The second, and is kind of tied together, is checkout compliance. So a lot of merchants nowadays have pre-selected subscribe and save uh, checkouts that could actually result in a lot of unexpected charges from the customer. And these unexpected charges often lead to low customer satisfaction or just low buyer trust in general that Shopify does not want on their shop.app marketplace. So you can see here, obviously AG1 is a large provider through or a large seller on the Shopify platform. They are larger, and Shopify does consider larger merchants differently than smaller merchants. So that's why AG1 is still on Shopify. But they recently actually had a whole FTC issue that they're dealing with. But even though they're dealing with the FTC, Shopify is still willing to keep them on because of their size. But for newer merchants, maybe like yourselves, this is something that they will not tolerate. They have whole AIs to go through your Shopify stores to make sure that the pre-selected subscription button is not selected. And if it is, you have to have really good disclosures around it. And this is something maybe Mike can get into on the next slide. There are two nuances when it comes to chargebacks that's really important to keep in consideration. They care a lot about the chargebacks that are associated with subscription canceled or product not received. Why is that? Again, subscription canceled often has to do with your checkout compliance. If merchants or if customers are getting charged and they're not understanding why they're getting charged, that is a really bad indicator to Shopify that there is going to be high buyer dissatisfaction. The other one is product not received. This is especially important for dropshippers that rely on Chinese fulfillment. Product not received obviously can result in high buyer dissatisfaction because they're always wondering where their product is. Why is it taking 5, 6, 7 weeks to receive their product? They're going to dispute as product not received. This is something that is important for drop shippers to have really good communication with their fulfillment partners so that they can increase or make their delivery times much faster so that they don't receive these product not received and subscription canceled dispute reason codes. So these are really critical reason codes to look out for to make sure you're not getting them in disputes. If they're mostly, let's say, fraud, folks like Shopify understand there's a lot of friendly fraud, right? There's a lot of friendly fraud out there. Customers are always trying to get products for free. And the reason code that customers use oftentimes to get free product is I lost my credit card or this credit card was stolen. So Shopify is actually a little bit more lenient when it comes to the fraud dispute reason code, but they are really aggressive when it comes to subscription canceled and product not received. And you'll actually receive emails specifically talking about fulfillment times and subscription cancellation policies. So this is something I've seen prior. We have really good response templates to that to help merchants get off of this compliance issue. But that's something we can talk about a little bit on the next slide. But Mike, I'm going to pass it to you to talk about store compliance, just because this is kind of where your expertise is, and I think you could share a lot of good knowledge with the merchants here.
Yeah, thank you, Chief. And then hopefully it sounded like it broke up a little bit. Hopefully it wasn't on your end and you were hitting some of the chargeback stuff, but I'll reiterate kind of what you mentioned there just to kind of segue here. But when you look at chargebacks and chargeback alerts, the initial design of chargeback alerts was really towards like actual fraud. So if somebody lost their card or, if it's stolen, um, if they're just not aware of the merchant that they interacted with, like the initial design of chargeback alerts when they were initially rolled out were around real true fraud. Now the alerts can be used for like again, product not as described, or if you didn't receive it right, merchants or sorry, customers can issue a chargeback against that merchant. Those indicators are extremely important for you to recognize, right? Because you ultimately control the outcomes with those. Because if you look at it, if it's not, product not received, right? Well, that's a fulfillment issue, right? It's a shipping issue. If you look at it as product not described, that's a quality issue, or there's something wrong with the product just altogether. So really taking a step back and looking at that information, it is very important that you start to recognize that from day one as a seller. If you are just getting chargebacks in general, maybe you don't have alerts yet, look at the reasons for the chargeback and work backward to try to fix that root cause issue. So, um, again, as far as like store compliance, there's a lot of things. So we do a lot of payment processing setups along with like risk assessments, and we deal with store closures all the time where Shopify Payments holds the funds, terminates their account, Stripe, whoever it may be, right? And a lot of times, merchants will just put together a store very quickly. They'll market the heck out of it, scale super high, and then it just gets shut down. So a lot of times they don't have, or they're missing some of these components. So like, having the support information or contact information on the website at the footer, and then having a section for the contact us information. Having an actual working number. Now, this is something that is becoming more scrutinized. As before, a lot of merchants were just using like an email, send us an email and we'll get you taken care of. They're wanting a phone number now. And on the back end of Shopify Payments is Stripe. So Stripe's rules are changing. They want to see phone numbers. People are actually answering the phone and responding to a customer inquiry. A legal address for the business. Now, a lot of times I see merchants using a registered agent address or a shared address. This is more specific to the US, but you want some type of office, right? You can do a WeWork that has a private desk. There are stipulations for certain providers around having an actual office. So there are some Visa rules too. So Visa and MasterCard have certain scheme rules to qualify for local acquiring. So all these things listed in this compliance checkbox section are really things that you like need to have to really avoid getting shut down, right? So I think that's where if you're missing one or two things here, that's where you're just susceptible. So like having a great chargeback rate and using alerts, that's like the science of what you do. But then there's the art. The art is making sure that your store and your website is designed and really customer focused. So like if you were to call somebody online or if you flip it around and you're the customer looking at your merchant store, you want to be able to have easy access and contact and know that you're dealing with like a real operator. So I think those are good points there. Ease of subscription cancellation. So as Chi mentioned, this is becoming more scrutinized, I think, as the days go on. I've been in payments risk for the last 15 years, and I've never seen, I would say, aggressive kind of focus on how subscriptions are being set up. So you do want to make sure that you're not just opting customers in. You're very just discreet on the or descriptive on your disclosures of what they're getting. So a lot of times I work with supplement brands and they're looking to do a refill every 30 days, right? So you got to make sure that you're describing these things at checkout, and you're also setting up like a post purchase email sequence. So once the merchant receives the product, they're getting an email like a week after to let them know that the subscription is coming in. So these are some things that I see. And she, like for you, like, was there anything else too that they recommended from like an email perspective that you saw when you had that conversation?
Yeah, so subscription cancellations or just overall subscription management is really being scrutinized
Right.
from Shopify right now. So we've noticed that some merchants have gotten emails asking them, look, you have a okay chargeback rate, but a lot of the complaints are around your subscriptions. We're going to pause your payouts until you give us an understanding of how you're going to make your subscription management better. So a lot of the emails that we've helped merchants craft is establishing and understanding that there is going to be a membership portal or a way to easily cancel subscriptions on your website. Also, and this is something that you should implement if you tell Shopify to implement, but this is something that they are looking for overall in general is email notifications of subscription rebills. Something that's a lot of merchants don't know is like the difference between subscriptions and negative option. Negative option subscriptions is basically where get customers don't have to approve the subscription refill and they're charged, right? There's no approval process. A regular subscription, actually, by definition, is every single subscription the customer has to approve before you charge it. So these notifications of subscription rebills is something that Shopify is looking for, especially when it comes to overall risk. And then the last piece is just 24-hour customer support. That's something they're looking for as well. If you don't have support that is quick in terms of response times, that's going to lead to a lot of overall dissatisfaction and chargebacks and negative reviews, right? You can't have a subscription, like email this customer support email to cancel your subscription and then there's no response, right? That's something that Shopify is definitely not okay with. And what they want to hear is fast response times, specifically 24/7 customer support. So a lot of the stuff that's listed on this email or on this slide is actually stuff that we tell our customers like, look, if you get this email from Shopify about subscription management, you want to note these three key things that you're going to take into effect so that it reduces their concerns around your subscription model.
Mhm. Yeah, and I think one of the arguments that I continually see when I work with merchants that do get shut down is that, and here's the side, right, that I'm in. I'm kind of in the middle, right? I support the merchant and I want the merchant to be successful. I want them to scale. I want them to market the heck out of their business and grow it and, be a 7-figure, 8-figure a month seller. But I think the best piece of advice I can always give new merchants starting out is that you have to kind of go slow to go fast. And what I mean is optimizing for customer experience. So you really have to just do the things within kind of like more of a box, right? And there are these like higher level businesses, these bigger businesses that are doing it in the gray. And what I say is like, the speed limit down the street here may be 35 miles an hour, or let's say you're driving on the freeway at 60 miles an hour. If you drive 70, you're technically breaking the law, right? You can get pulled over and get issued a fine for that, right? It's kind of the same with these subscriptions. Now, these bigger guys have more clout. So, like when I look at a bigger, there's several brands out there that I work with, but like some bigger brands, they may be a little bit more aggressive with their opt-ins and some of the disclosures, but their Trustpilot ratings are like phenomenal, right? So like there's kind of a give and take here. But if you're a brand new merchant and you're just building, you really have to be sensitive to the fact that you're more on thin ice than somebody that's more established, right? And so that's where you have to kind of make this call where, if you go fast and accelerate, you're at a much higher risk of shutdown than somebody that's taking it more methodically, growing, making sure that they have the operating system to really support the business at scale, right? So there's so many times that I see where merchants will flop over and it's pretty much the end of them once they have their funds stuck and they can't do anything, right? So you have to kind of look at it that way. It's like, I get it. There's a lot of advertising online. I work with a lot of coaches that, they want you to scale. I do too, but you have to look at it that it's more difficult to kind of just let it rip out the gate in today's environment than even what it was 6 months ago or 6 years ago.
Yeah, that's right. Now, I want to talk a little bit, and I apologize. I think I'm having a little internet issues, so I might cut in and out. But I want to talk about the recent changes that Shopify made and including their RDR rate and their chargeback rate. And this is something where I've gone back and forth with Shopify on, and they say they haven't changed their risk assessment model, but then also some merchants got emails saying that their overall chargeback rate is too close to 1%, right? And obviously, that's a threshold that's never really been shared before with these merchants. So it's kind of, yes, they haven't changed their risk modeling because they consider RDR, but during the rollout, I think there's been some thresholds that have been assigned that merchants really want to stay below. And overall, we've worked with all of our Shopify merchants to reduce their overall RDR count as well. So, how do you do that? How do you reduce RDR count? Well, one of the best ways to reduce RDR count is actually leveraging CDRN alerts. CDRN alerts are sent by the issuer, meaning Shopify doesn't see it. RDR alerts are an acquirer based alert, meaning RDR is actually handled by Shopify. Basically, whenever a dispute comes in, there's a dispute ID that Shopify sees, but then it's also tagged with a suffix of basically RDR, right? So leveraging CDRN has been a really great way for our merchants to bring down their overall RDR rate. And there's no overlap because CDRN runs through the issuer, which is sent first. And if you resolve and refund a transaction that's alerted by CDRN, it will never become an RDR. So all Shopify sees is that's a refund rather than an RDR dispute that's been refunded. The next thing that we've applied to all of our Shopify merchants are deflections. Deflections are great, especially for subscription merchants, because it fights friendly fraud. So you guys might have heard about VAMP, right? VAMP is something that Visa rolled out. It's their new, basically, monitoring program for disputes. And what's nice about deflections is not only when you get a deflection, you don't have to refund the customer. It's not like an alert where you have to refund the customer to resolve the dispute. Deflections actually allows us to send IP address, transaction history to the issuer at the moment of dispute, and the issuer basically tells the customer, "You can't dispute. You've clearly been purchasing from this merchant. This IP address makes it so it doesn't look like it's fraud, right? And you cannot charge back overall." So deflections are great because, again, these chargebacks never turn into chargebacks and Shopify will never see it. So getting these deflections up and running can reduce your chargeback rate by another 10%, where 10 to 20%, where Shopify does not see those chargebacks. And then the last one that we're really excited that we've rolled out recently is our enhanced Discover alerts. So Discover alerts are traditionally done through Ethica. We've now cracked the code on improving coverage on these Discover alerts. And Discover is something that's really annoying because the Discover transactions on your store may only account for 2 to 5% of your overall transactions, but they oftentimes account for 10 to 15% of your disputes. And that's just because Discover cardholders typically will dispute more than a Visa or MasterCard card holder. So we've figured out how to basically bring Discover Alerts down to zero. And that's our new Discover Alerts product that we've launched and are very excited to implement across all of our Shopify merchants. They're seeing some really fantastic results there. So the goal, honestly, is you look at your Shopify graph, chargeback rate graph, and now it includes RDR. The goal is to get that rate down. So anything that can front run the RDRs, such as CDRN, deflections, or just by handling chargebacks that previously could not be handled by alerts, like our Discover alerts, that has really been impactful for the success of our merchants on Shopify. Now I want to talk about subscription token migrations. So this is something I spoke to with Shopify Risk as well. Like all these merchants, they get all these subscriptions on Shopify payments. They really don't want to lose these subscription tokens. And right now, it doesn't seem like there's a good way to migrate Shopify payments subscription tokens. And what Shopify came back to me and said was, look, we need to remain PCI compliant. And we've been really hesitant around subscription token migrations in the past because we need to do a good job with PCI compliance. And we can't just be giving away these subscription tokens to anybody. However, Shopify has indicated that they are more willing to migrate subscription tokens nowadays only if it is to a trustworthy payment processor. So tier one processors like Adyen, Checkout.com, Airwallex, and Stripe are folks that they consider to be more trustworthy, right? It's more on their level, and they are actually willing to migrate subscription tokens to those payment processors. So that's something that not many folks realized in the past that I wanted to share is if you work with Shopify support and you tell them, look, I'm moving over to Adyen, I want to move my tokens over to Adyen, they will actually honor that. So that's something that you guys should keep in mind, especially when, you know, emotions are high and you lost your payment processor and your subscription tokens are stuck. This is actually not an end of world kind of thing. If you're using a tier one processor, Mike has a lot of relationships there. We have a lot of relationships there to get you on these better processors. They're actually willing to do the subscription token migrations. The last thing that I wanted to touch on is overall how to de-risk your payment stack. Many of you guys on this call have one payment processor, right? It is Shopify payments. Once you get large, or even at the beginning, you guys should really consider this because you guys are running more aggressive offers, subscription models, etc., that are prone to customer dissatisfaction and possible shutdown, is payment orchestration. Payment orchestration allows you to have one single checkout, but then attach multiple mids on that checkout. And then the vaulting sits with the orchestrator. So all your subscription tokens are not tied to the payment processor, they're tied to the actual orchestrator. Okay. What this means is if you do have one of your payment processors that are attached to this orchestrator shut down for whatever reason, you'll be able to move traffic onto the other processors without losing your subscription tokens. We have a lot of great relationships with orchestrators such as Gravy, Primer, VRIO, etc. You guys might have also heard of Checkout Champ and Sticky. Like those guys are able to help you de-risk your overall business because you're not going to be stuck without any transactions if you get your Shopify payment shut down. Having an orchestrator is very key for those running aggressive offers so that they are de-risking and diversifying their payment processing by leveraging these solutions.
Yep.
Anything you
And I
want to
think,
add there, Mike?
yeah, I was just going to chime in. I think I would say out of all of my seven-figure a month sellers or more, they've all done this setup, right? They're usually setting up with Checkout Champ or Phoenix or Sticky, as you mentioned. They're really kind of routing it in a more sophisticated way. And I think diversification is key. We're not saying Shopify payments is bad in any way. It's just more difficult to manage and manage it. You just have to manage it more compliantly. You also have to think too is that Shopify is a payments company first. They make a majority of their revenue on payments, so they do want you to utilize their payment stack, but they also have to manage risk, right? So, a good method is having, Shopify payments as kind of one funnel or layer, and then running like a third party checkout like Checkout Champ or again Phoenix, Sticky, whatever it may be. So there's different ways to kind of, I would say, skin the cat on this. And so you just have to work with your teams internally, or if you just need advice, reach out to one of us. We're more than happy to kind of give you perspectives on how to run offers. And again, there's higher risk offers as well. A lot of people that I work with are doing neutral right now, or just different rebills and different strategies around opt-in. So that's where we can give you just kind of a full stack audit and just review and provide the right layers so that way you can run these successfully.
Yep, that's right. And it's going to save you a lot of heartache, guys. Like, don't be in bed with just one payment processor and then lose all your payments. diversification is key, like anything in life. So getting started on this stuff earlier than later is going to be something you will not regret. All right. Now we're going to open it up to questions from the audience. So I've already seen Doug. You asked the question: would a listed MSP on the Visa ISO registry be considered a reputable company? The short answer to that is no. So Shopify will really just want to transfer subscription tokens over to folks that are of their status, right? Shopify is a publicly traded company. It does, I think over $1 trillion in transactions a year. They're looking for processors that are of that same level that they're comfortable transferring subscription tokens to. And ultimately, like that's going to be your Adyen's, that's going to be your checkout.coms, that's going to be your Air Wallets. That is unfortunately not going to be your traditional higher risk ISOs or mids, or sorry, ISOs or payment processors that deal with your traditional high risk guys. All right, Leopold, I have a question related to PayPal wallet integration to Shopify payments. Number one, are PayPal increase taken into account in the overall chargeback rate in analytics? It's unclear whether it is. And 70% of my disputes come from PayPal. What are the ways to reduce these disputes? Is it worth cutting out PayPal altogether? For a worldwide store, how much will this affect checkout conversion rates? So I can talk a little bit about this. And then, Mike, can you see these questions as well?
Yeah, yeah, I see him in there.
Okay, cool. And then I'll pass it to you to answer whatever I don't.
Mhm.
So yes, PayPal inquiries are taken into account in the overall checkout chargeback rate. We've actually informed a lot of our merchants to turn off PayPal just because it's caused more problems for their payment processing. With that said, there are ways to establish PayPal alerts. We're working with PayPal right now to optimize these alerts, but our merchants do receive PayPal alerts. The hard part about these PayPal alerts is matching them to the actual transaction, especially if you're doing high volumes. If you're beginning out using PayPal, we are able to cover some of your transactions because the matching is a little bit easier just because you don't have hundreds and hundreds of PayPal transactions a day. But the overall coverage is going to be lower. Something I wanted to highlight is PayPal is a closed loop system. What does that mean? That means they do the payment processing and they also allow for the customers to pay through their wallet. That means that any disputes through PayPal and not through the banks are never going to hit the Visa Mastercard networks, which makes alerts really hard. It just remains within PayPal. PayPal sees it, they pass it on to Shopify. We are not able to see this. So that's something to consider as well, is that alerts will only work for about 30% of PayPal transactions, and the remaining 70% remain in the closed loop system. And no one sees that except PayPal. We are working with PayPal on that, but that's going to take some time. In terms of overall conversion rates, I don't really have an understanding around that for turning off PayPal. But Mike, have you seen that with your merchants?
Yeah, I mean, if we're speaking specifically to the US market, I mean, definitely want PayPal. I always say you want four different payment methods. So in my opinion, you want to have cards. That's like an obvious yes. You want to have wallets, Apple Pay, Google Pay. Like I kind of have PayPal on its own island, I would say, and that's like a very popular checkout method. Particularly for the US, in European markets, Germany, that's like a must-have, along with Florida and like other payment methods as well. But yeah, I think if you're looking at this, I think it's fine in a very managed way to use the PayPal wallet on Shopify payments. But once you start hitting, different volume levels, then you probably want to look at third-party processing along with PayPal. Just having your own PayPal and splitting those up because yeah, it's going to really trick up that chargeback rate because again, it's its own ecosystem. And I've seen merchants that were using the wallet that I haven't really seen a good outcome ultimately with it with some of my sellers that I've been working with, and we've always split it up. So that's kind of my personal opinion on it, just because most of the people that I do work with are running pretty aggressive offers.
Yeah, if you want to be safe, turn off PayPal acceptance. It's just not worth the headache.
Hmm.
Nikolai asking, prioritizing CDRN over RDR for Shopify payments. Is this already done in Chargeblast or do we have to disable RDR? That's a great question. So right after my call with Shopify Risk and getting more clarity around their overall take on chargeback rates, I actually sent an email. Chargeblast sent an email to all Shopify merchants notifying them that we're turning on CDRN. What's great about this is you're not going to be paying for extra alerts because again, CDRN front runs RDR. So anything that becomes a CDRN will not become an RDR. Also, we do automatic crediting for any overlap that exists with Ethica and CDRN. Now, your second question of disabling RDR, I do not recommend disabling RDR. And the reason why I don't recommend disabling RDR is because at the end of the day, the VAMP program, so that's the Visa Acquiring Monitoring Program, right? This is Visa's program not to necessarily look at merchants. This is how they look at acquirers. So Visa no longer monitors merchants, they monitor the acquirers, and all the fees go to the acquirers, and it's up to the acquirers to pass that along. Now, TC15s are protected by RDR. I tell my merchants keep on RDR because as soon as you take off RDR, these TC15s are going to start hitting Shopify. And CDRN doesn't cover all of RDR. It's not like a one for one complete replacement. So there are still going to be things that are still going to be chargebacks that hit the RDR rails. But if you turn off RDR, what'll happen is now Shopify is going to start getting hit with your disputes coded as TC15. And they don't like that, right? They appreciate you turning on RDR. Yes, they still consider RDR in their overall assessment because those are still viewed as disputes to a degree, but they're not as bad as if you remove RDR altogether and they become actual disputes and actual things that count towards actual TC15s that count towards their VAMP ratio. So don't turn off RDR, simply layer on CDRN to reduce your overall RDRs, but keep RDR on. Otherwise, it's a faster track to just getting shut down because now Shopify is being burdened with your TC15s. All right.
Hmm.
All right. For Liam, for a brand utilizing China fulfillment but has no subscription based offers, what would be our main focus to keep Shopify payment relationships healthy? Shopify chargeback rate is 0.02% with alerts. Active and all support info is easily accessible with support replies around 3 hours. Are there any small additions you would recommend that would concrete our setup? So, your Shopify chargeback rate is 0.02 with alerts. Now, again, Shopify is able to see your RDRs, right? So you have to consider what your chargeback rate is with the RDR added back. I don't know if you can share that with us in the chat, but RDRs are something that Shopify sees again, and they can also see the reason code, right? So the reason code, if it's product not received, that is going to be something that Shopify can still get concerned with, right? So if your fulfillment is taking too long and your RDRs are coming back in mostly as product not received, even if you have a low chargeback rate, like I mentioned, chargeback rate is not the main focus of Shopify right now. Shopify's main focus is buyer satisfaction, right? Like I said before, and I'm going to reiterate, Shopify is willing to take on merchants with above network chargeback thresholds, chargeback rates. But if the overall buyer satisfaction indicated by the reason codes is worrisome to them, so these are subscription canceled and product not received, that is a concern. Okay. So even though your chargeback rate might be low with alerts, if you're getting subscription cancellation issues or product not received, that is what they care about. And that is something that they will reach out to you about.
Hmm.
And then you
Yeah, the other
responded. Go ahead, Mike.
I was just saying the other thing you want to keep a tab on too is your refund rate, right? I know we've been really highly focused on chargebacks, right? But if
Yep.
you do have alerts plugged in, right, and you're relying on alerts to keep your metrics down, but your refund rate is 2 or 3%, that tells you something, right? That's an indicator of like, why are the refund rates so high? Do you have a money back guarantee? Are people, canceling subscriptions and they're always canceling at month two versus month one? So like there's all these things that you have to kind of look at too. And refund rates are factored into risk calculations, right? If you have a massively high refund rate, there needs to be liquidity and money in the bank for you to support that type of behavior too. So it's not when Shopify and any payment provider is looking at your profile, it's not just chargeback rate. Yes, obviously that's very important, but they are looking at other things too, right? So I think you have to take a step back, look at multiple pieces of data, and I think the one thing you always have to focus on is the customer experience number one to my business? And if the answer is no, then that needs to be changed to yes, right? So what things are you doing to optimize for customer experience to like get those reviews up, to like make sure that every customer you touch is satisfied, right? And if you really focus on that as like your number one core question, usually and most of the time, everything else falls into place.
Yep, that's right. And then the next question, and I see we also have other questions on the Q&A, not just in the chat. So it's good. You guys have a lot of questions. That's what we're here for, right? Um, so Leopold, to what extent are non-verified review shop trust pilots a risk factor for Shopify payments and other payment processors? It is actually a risk factor. It is a high, it is high on the risk assessment. So if you're not listed on shop.app and have reviews on shop.app, what they're going to do is look for third-party review platforms like Trustpilot. And even though they might be unverified reviews, they're not going to really care because ultimately they care about their overall platform and whether there's good buyer satisfaction across the platform. So, what they told me specifically that they look at are Trustpilot as well as Amazon reviews if you're selling on Amazon. Obviously, if you have any issues with the BBB, that's a big problem. So don't get in trouble with that. But yes, yeah, they look at Trustpilot even if it's unverified.
And I would start
Um,
soliciting, register for Trustpilot, start
yep,
soliciting for good reviews right away, right? Because
yes,
what happens? You start running for a couple months, and usually the only time people go on Trustpilot is to complain. So, I see people with like, their first 20 reviews are all bad, right? And it's like stuff that's fixable. So always try to solicit reviews like right from the get-go and your post-purchase emails and just follow up to discount codes, things of that nature, and like offer a discount for a review, whatever it may be.
yep, that's right, that's right. Get those reviews up. It's going to matter a lot in your future health, in your future processing health, with Shopify specifically.
Mhm.
All right, Jason, lots of questions. Good. Okay, let's start with your first one. What are the actual number chargeback rate thresholds that are significant? I heard 1% in the past is safe, but recently heard lower numbers. Also, what time frames does it matter on? So, Jason, like I mentioned before, Shopify Risk is willing to take merchants with even uh, above network chargeback rate levels. And we do have some merchants that are larger that run very hot. So when you add back in the RDRs, like they are above that 1% threshold that Shopify has kind of been shopping around. So it's really right now about improving buyer satisfaction and getting your reviews up. If you can get your reviews up and make sure your page is also compliant, right? So be careful, be very careful, guys, with the pre-check subscriptions. They have AI tools, so literally just look for that. It's not very hard, right? Be very careful with compliance in this day and age. It's around that. Your chargeback rate can be elevated, but if you have good reviews, they don't really care, right? They understand there's problems in the business sometimes. They understand there's friendly fraud, but I would say just a good rule of thumb is that graph that you see on chargeback rate, keeping it below 1% is optimal. All right. So I would say that's a good rule of thumb because that is at least what Shopify risk is kind of like flying around, indicating to merchants. And then your next question is, I know RDR is included in the chargeback rate now in Shopify, but I also heard it's just listed on the dashboard, not actually used for risk assessment. Is it true? It is used for risk assessment. RDRs are still technically a dispute. You are resolving this dispute ahead of time or really fast for the customer to provide them a good customer experience. If you dispute, you get your money back right away, right? There's no going back and forth trying to win the dispute over 90 days, right? But it is still considered a dispute, and Shopify sees the reason codes for the disputes. So it is in the risk assessment. There's no question around that. That is something they stated to me very directly. All right. Your next question is, can you speak more about the token subscription migration? Can you get set up with one of these tier one payment processors even while using Shopify payments now? You can always have multiple payment processors. It's a question of how do you get your payment stack set up well, right? So let me go back on this page. You can use Shopify payments, and then you can also use some other payment processor. But to do this well, you basically need one checkout, right? And right now you're probably using Shopify payments checkout. So leveraging one of these third-party orchestration platforms that have their own embedded checkouts is a good way to set up for multi-mid processing and then migrating the subscription tokens to either the other PSP or the orchestration platform. That's probably the best way that I've seen merchants go about handling their subscriptions in a manner that, is de-risking their overall reliability on just Shopify payments. Anything you want to add there, Mike?
Yeah, I mean, I think just when you look at it, when you're looking at a tier one providers, there's typically minimums with the exception for Stripe, like checkout and Adyen, there's volume minimums. Typically that can be north of $1 million a month in processing volume. So what I see is that when you're looking at a migration of some sorts, you're diversifying. So you may just run Shopify payments on your store, and then you create a third-party checkout with Checkout Champ, again, Phoenix, Sticky, one of those options, right? And you start to build out through that, and then you start to build, your stack or your volume through those checkouts there. And then you can look at a full migration, and then you can kind of upgrade to those tier one processors because they're just not open to everybody. They're a tier one processor for a region. They process for Fortune 500 or publicly traded companies. And so they're very hard to get, but your volume needs to be in line. Your reviews have to be in line to get those processors. So, hopefully that gives you a little bit of perspective on that too. But, usually when I see a migration or a change to a third party checkout, they kind of look at setting up. We look at setting up with a more flexible, like mid-tier provider that is more higher risk, and then we can kind of upgrade from there.
Yeah, that's a good comment.
Mm-hmm.
All right. So, Lippold, I meant on our websites directly, displaying unverified reviews on product page, homepage, is that a risk factor? Okay, so I get what you're saying. You're saying
Mm-hmm.
like, look, I have a 4.5 on Trustpilot with a 12,000 reviews, but there's that Trustpilot doesn't actually exist. Mike, maybe I'll just pass it to you because I feel like
Yeah.
you might have more experience there.
Oh yeah, I get that. I mean, that's like marketing. Everybody does it. I think I've had to call this out in like almost every merchant I work with. I can't even think of one maybe that doesn't even do it. Yeah, it's not hard for the underwriter to go online and see Trustpilot. Like I had one, it was funny the other day. They had said a million happy customers had the Trustpilot badge. I go to their Trustpilot, there's like 10 with like they're all like 1 stars. And I'm like, this isn't gonna work. So you need to be honest and credible, right? There's nothing wrong with actually taking your total transaction count in Shopify and saying you have, I don't know, 10,000 happy customers, for example. You just can't replicate the Trustpilot badge and say like, or say it's Trustpilot, right? It's just the underwriter, you got to think these are human beings. And a lot of these like underwriters are kind of JV. What I mean by JV, they're very green. They're just kind of checking boxes here. They're not going to like fight for you like I would fight for you or she would fight for you. So if you're going to resemble something, they're going to go online and say this looks like Trustpilot, and then they check and it's off, and that's a risk flag, right? So they're not trying to do you any favors on these. So you got to make sure you're staying within the box, or just make it, you can still say you have all these happy customers, but the referencing has to be different and the framing of that has to be different than saying it's Trustpilot when it's really not. So yeah, hopefully that
Yeah.
clarifies.
Yeah, I think that's a really good point, Mike, especially around the part of like these underwriters are humans, like, and they're really just checking off boxes. Like, keep that in mind. There's actually people looking at your websites. They're not just like, you might think, oh man, Shopify is so big, they're never going to look at my website. They look at your website, especially if it gets flagged for, on RDR for like, oh, subscription cancel is a big problem, or if like product not received is a big problem. They'll look at your trust pilot, the actual one. They'll look at your website, and they'll make a determination pretty easily. Nikolai, pre-selected subscription button. If review support, backend, etc., is on point, is it fine or is it a no-go? So it's a complex one, right? If you have really good reviews and you have decent disclosures and things of that nature, I would say it is fine. It is always risky, but it is generally fine. Like AG1, yes, the example I showed you guys, right, is literally from the AG1 website,
Hmm.
and it's subscribe and save pre-checked, right? But AG1 also has really fantastic reviews on their shop.app store and across their other platforms. And so if you are doing good by your customers, Shopify probably won't mind that. I don't know, Mike, have you seen differently there?
Yeah. I just bring it up with this speeding analogy. I think that's the best way to describe it is that
Yeah.
they're like rise. I get this all the time from customers. It's like, this brand is doing it, and I've worked with large brands like Manscaped before, and like, they kind of have a tricky subscription setup as well, right? Yeah. Are you really hurting the consumer by doing that, right? And I think it's a discretionary call. Like, are you being like predatory and like hurting your customer, right? And if the answer is like ultimately yes, and it's validated by these bad reviews online, and like you're not being very descriptive on your post-purchase subscription updates, things of that nature, then yes, right? If you're trying to just sneak in that recurring revenue and you get paid, and your chargeback rates spike and your refund rates spike, then yeah, that's not good. You're hurting your customer, right? You're really being more predatory in that way. But if you are aggressive and you're kind of in this gray area and customers are happy, it's like a coin flip, right? It's like speeding, going 70 and a 60, and there's no one around. You're not harming anybody, but the cop can pull you over and give you a ticket, right? But like, is that going to happen? Probably not. So it's very discretionary. So like if you're managing everything really well, I think you're fine, but you just continue to over disclose and show proof that you're ultimately trying to protect your customer, and you're not doing anything that's like hurting them. So I think that's the question you have to ask yourself.
Right. And something else that I'll call out is you'll see a lot of these merchants on X, and they're like, oh, my store got shut down, but my chargeback rate was 0.3%. Or my store got shut down and I got zero chargebacks, right? I literally just started. At the end of the day, I'm going to emphasize this a lot. Chargeback rates matter, but they are really looking at compliance and at reviews. If you have a low chargeback rate, but you're getting a lot of product not received, or you're getting a lot of like subscription cancel chargebacks, but even if it's a low chargeback rate, right? And you're seeing a lot of they're seeing a lot of bad reviews online, that's a no-go. You'll get shut down. You can have a chargeback rate of 0.2%, but if you're just hammering customers on subscriptions, like I've seen weekly subscriptions. I've seen, try out for 7 days and then get hit with $60 a week. right? Let's be honest. It's not going to fly with anyone, even if you have a low chargeback rate. So at the end of the day, I think the biggest takeaway here for you guys is there is more emphasis on reviews and compliance than ever. Okay. And Shopify Risk has stated they are willing to take on merchants with elevated chargeback rates, but the overall experience that the customers have and share with online is really, really important. So if I had one takeaway for you guys, I would say it's that, especially for Shopify payments right now. And then the second takeaway would be get diversified on your processing, right? Reach out to
Mhm.
Mike, reach out to me. We have great partners in the space that allow you to set up this payment stack. Get diversified because with VAMP really ramping up next year, these processors, especially with Shopify going into the marketplace business, these processors are going to be a lot more careful about overall merchants that they're onboarding and they're keeping on. So diversify your processing for sure. Another question came in from Manusas. Is Shopify really only concerned with the reviews for shop.app and Trustpilot? Would they ever look into review apps like judge.me? They didn't
Mhm.
flag that one to me, but I don't know. Like, Mike, have
Yeah.
you heard of anything with that?
Yeah, that's a popular one. A lot of clients that I work with do use that. We factor that in. We even use Facebook reviews, Instagram, things like that. As long as you just want to start soliciting from every channel you can. We do use that if we're trying to compel Shopify payments to overturn a shutdown or get reserves out. So we take them from all sources. They just need to be a validated partner, right? Can't just be, somebody that just leaves something random. Facebook reviews are very discretionary too, but like Judge Me is fine. That's verifiable.
Yeah, great. All right. Any final questions before we wrap up? We've got about, yeah, we're at top of the hour.
Hmm.
All right. If you guys don't have any questions, feel free to always reach out to me and Mike. You guys have our emails through the webinar, and we're always here to help. We're on the side of the merchants, but obviously we also have relationships with the processors, which can help out. But at the end of the day, like we can only support, we can really help you guys out if you guys help yourselves out, right? With this kind of stuff. Um, yeah, it's hard to overturn or revive a merchant that is obviously scamming customers. That I'm just going to leave it at that, right? And I'm not going to help that out, right? It's a bad look on my own reputation. So get yourselves, diversified and make sure the reviews are good. And hopefully you guys have much fewer problems there. And then also, if you guys want to ask me about any of our Discover alerts that we've recently released, that is fantastic. For those that are on Chargeblast right now, those are actually going to be added in automatically through your ethical alerts. So you'll just see higher coverage on Discover chargebacks. You'll basically see those go down to zero. All right.
Cool.
Thank you guys so much. Nikolai, I'll try and send you a link of this recorded webinar after this call. Okay. Thank you guys.
Yep. Thanks, guys. Appreciate
Yeah.
it.
Bye bye.
Thanks. Bye.